Good morning, good afternoon, good evening, everybody out there. Hope everyone's having a good day. I'm just going to kind of wait a few minutes here for people to filter in. Probably haven't seen this much of me publicly on my own channel in a while. It's good to be here. Yeah, new year, new problems. Quite the volatility today in the crypto markets this morning. I got a friend here that he's a TA expert, and I've been tracking his trades on Twitter now for maybe like 6 to 8 months, maybe over a year now. Now that I think about it, just kind of like watching his calls, and man, the dude's accurate, and he's got a tremendous skill set. So I'm excited for the guy to get some deeper exposure into the YouTube side of the Hexakin community for sure. I mean, the Hexakin and PulseChain community is massive, and so I'm just excited to see this outside perspective with all these expertise in all these different areas come in and give us his opinion on the overall market, but then his outsider opinion on what's going on with PulseChain and Hex. Who is the mega dumper? I don't know. There's a lot of beef going on right now, talking about Steph from Staker app basically shutting down the app and dumping some Hex. But by my knowledge, I'm pretty sure that guy has like a lot bigger, like tens of thousands of T-shares locked up going out 15 years. So I don't think he's gone by any stretch. But definitely interesting news hit piece at least. Mega bullish. I did a stream with Ryan on Sunday. Make sure that if you haven't, go check that out. It's on the channel after you're done watching this episode, of course. It was another sentiment analysis on the markets. Appreciate you for doing that. Can't help the bullishness. Well, and Zero's going to come on here in a second and temper your guys' bullishness a little bit here with the recent price action. So I guess that may be a good segue. So without further ado, I'm going to bring on Zero Crypto to the stage. How you doing, brother?
What's going on, brother? Thanks for having me on.
Appreciate you. Appreciate your analysis, giving away all those alpha gems for free on Twitter for all these years. I think you've had other accounts before, right? And then they were bigger, and then they've shut down. But how about you just give everyone just like a brief overview of like kind of where you're at in the market today, and then like kind of what that history looked like, and then where this is heading in the future.
Where we're at in the market today, I'm a little bit cautious right now because I do see a lot of macro signals that are looking iffy. I tend to believe 2024 will be a really choppy, volatile year. A lot of downside is what I'm expecting. And I'm not talking about the PulseChain ecosystem specifically. I'm mainly talking about traditional markets, Bitcoin and Ethereum, the giants. I'm not liking how they're looking.
Mm-hmm.
So I'm very cautious right now, but there's always a light at the end of the tunnel. So I think people who stick around will be rewarded. So you have to stay in the market. You have to stay vigilant. You have to stay watching, because the moment that you step away for too long, it's real easy to miss what's going on, and you can miss major opportunities.
I agree with that. I think like a lot of the biggest opportunities comes when the market is the most complacent, depressed, and bored out of their minds and have walked away. And so like, you get these like super flat periods. And I guess just quick example, we'll look at Bitcoin here in a second, but just looking at like this chart here, if you take it off log scale, you prefer charting in linear? Probably.
I do, actually. I prefer seeing all the dramatics. I mean, when you look at it in linear scale, that looks pretty devastating, which it was depending on where you bought. But then you also think about people who got in early, and we had to wash a lot of those people out is what happened. There's people who got in at, I don't even think this is the complete chart. Maybe it is. I can't even see that far down, but
this one starts. Yeah, this is the complete chart.
This one's the complete chart.
So I solicited TradingView and had them update the chart. So if you just type in Hex USD, it loads all the data in now. So
that's right. You did do that.
So anyway, all this. But here's the thing that I wanted to get your opinion on was this period here in the beginning. like who really captured that? Like there couldn't have been that many folks that went heavy in down here and really
I agree.
captured those returns, right? I think most of the adoption really came in like this period here, maybe. Or not that the most adoption came in here, but the most gains was made by the most folks in that range. Maybe people's cost basis from this time period was somewhere around a half a cent, which would explain why we're kind of like playing with that level now after this divestment out of Hex and all these other things. Yeah.
Yeah, I must say, eHex has recently been looking a lot better than what I expected. Um, I have high hopes for it in the future, but we're gonna have to wait and see with what PulseChain does. You know, everything is connected by the liquidity now,
Mm-hmm.
but I'm still pretty bullish on it. I'm not sure if we've seen an absolute bottom yet. Nobody really knows that. Anyone who claims they know that, obviously they're lying. Um, but I did have some charts pulled up. I'll pull
Yeah.
those up in a second and we'll go through those. But yeah, there's still money to be made. I mean, stuff is cheap right now. People got crushed, 99% down. It was only natural that we had a really vicious dump given that we've had crazy gains.
Mm-hmm.
So it does make sense that things are low.
Here's a question for you. Let's assume that we didn't have PulseChain sacrifice phase, and so like all of this price action just didn't exist. And then let's say we never had PulseChain, so then all this price action didn't exist. Do you think that like overall that this market would have bottomed and been trending up by now, and perhaps something like this?
I do think it would be looking a lot more bullish right now, given we didn't dilute everything. Also,
Yeah.
there's the fork. So we have the PHEX. And so now it's a little bit confusing for people because you're going to look at this chart and it's not exactly telling the whole story because the value was split up. And not only was it split up, now PHEX is worth more. So you kind of have to combine those two together to get a more accurate view of the real price.
Let me do that for you right now.
You have a chart of that?
It doesn't go all the way back, but it goes to the start. So this is the actual combined hex price right now. Kind of got hit
Wow, that's a
today.
good chart.
But yeah, this is it's above the lows. So yeah, the lows aren't in yet, but we can hope, right? So yeah, we can look at this in a sec. I kind of wanted to talk to you a little bit about the Bitcoin chart and kind of like with this kind of like the news the news cycle and this ETF stuff and kind of like this fake out pump and Darth Maul type candle we got here on the weekly that's forming.
It's a lot of dead bodies in that candle.
Yeah, I think it was like $1 billion liquidated or something. That's a lot of money.
Oh man.
I guess like my analysis is like we're gonna come back and test 32K ish area at some point, and the question for me is, do we go back and test it now, or do we have to come up first before we come back and test it? And it sounds like from your thoughts, it's a lot going to play out a lot like it did in 2020, where it's volatile as all hell, and you're going to get that kind of like crazy movement. It'll be people are going to get wrecked on both sides.
Yeah, I tend to think that the local top is actually in. I actually do believe that. Now, anything can happen, so I just work on probabilities. Nobody is 100% accurate, but I tend to think we're going back to 31K pretty soon, sooner than people believe.
That'd be better too, in my mind. It's healthier to get down there now rather than to overextend even further, because so many folks missed this trade. People thought here that it was going to come back. And I mean, they were thinking that in the banking crisis as well. So people got left behind kind of in two big ways already this cycle. It's time for this to come back and retest this structure here that we built, come back and make sure that that's solid support. And so I'm with you. I think it's coming sooner rather than later. I think this was as close as we were going to get to that 48K level, and look at how it just played with what was the bearish breakdown from the Do Kwon stuff that went on back in 2022. So
Oh,
technically,
dang.
and hitting that resistance level and needing to come back to test structure, I'm with you, man. I think Bitcoin is heading lower.
It's funny how when everybody has a target too, it tends to not hit. I've been hearing 48K shouted from the rooftops for
Hmm.
weeks now, and I think this is just a great example of front running.
Hmm.
And it's not always perfect on the absolute number. You know, you had people doing the same thing when Bitcoin first bottomed in 2018. Everybody was calling for 2K,
Yeah, I remember
2K,
that.
2K,
I
2K.
was here on Coinbase buying at 3K, thinking like, oh, I hope it doesn't go to 2K. And so yeah, I mean, I remember even Tone Vase was saying 1K. That would have been all the way down here, but it stopped short, right, and it reversed. So yeah,
Yeah,
I
so
those targets, they just the things never hit what the mass consensus is. So true.
yeah, you have to take it day by day sometimes and always formulate your own opinions. I think it's really good to hear insights of people, but you should always have an opinion of your own that you tend to go with. That's helped me a lot because I used to watch other people and just take everything they say as financial advice. But the moment I stopped doing that, and I would listen to them still, but I would formulate my own opinion from the information, that tends to work out a lot better for me. So that's what I recommend to everybody.
I'm with you, dude. I like you started, watching YouTubers and watching analysis on Twitter, and what you get from that, or what you need to get from that, is you need to build your own process. And what you need to do is you need to find what works for other people, and then pick up the gems that are going to work for your system that you're making for yourself. It's something
Exactly
that you
that. Yeah.
develop over years of time. You're not going to be able to do this in just like 6 months, because for like someone like Zero or myself that's been in this game for years now, I you've been here since 2017 or before that even. You said that you might have even you've known about Bitcoin for even a lot longer than that.
Yeah, I would say 2017, although I've known about it since 2012, 2013, but
Yeah.
I didn't really make any moves. So I would just consider myself entering the game officially around 2017.
So then that'll support this kind of thought process that I have, which is like you need to be analyzing and watching the markets every single day or every week or on a very, very consistent and regular basis for years of time in order to have this backlog of data in your mind. And it takes someone almost kind of partially neurotic to like get to this level where you're like, I can remember the Bitcoin chart without even looking at it. I don't remember specific exact days and times necessarily, but I remember the shape of the chart, what happened, what the sentiment felt like. Um, and beyond that, I've now started to learn things like the DXY and the gold chart and oil, and because those move a lot slower, it's easier to remember. Like oil has just been in the dumps for a while now, and the reason why I even watch it at all or find interest in it is because it led it leads the dollar sometimes. So like with this breakdown here, this broke down before the dollar broke down in a bit, and it broke down in a big way, which because oil and the dollar are so tied together by their liquidity. In this case, it's a commodity, and the dollar are heavily tied together. If one takes a hit, the other takes a hit. They're correlated positively, and so just like knowing these things and drawing these, you can draw certain conclusions early, so that this upside in Bitcoin was actually foretold by oil, which then broke down in
Absolutely.
dollar. Yeah,
Yeah, that's
thoughts
a
on that?
great point. A lot of people just getting into this space aren't aware of certain things like that. The DXY, oil, equities, SPY, QQQ, all of those things tell a story and they move a lot slower. So it's really good to have those in the back of your mind. It just gives you extra alpha to basically confirm your thesis that you might already have. So if somebody was very bearish on crypto recently and then they're seeing a potential double top playing out right there, you know, it's not guaranteed, but it gives you a little bit of extra confidence, essentially.
here's a question for you. Let's get into the S&P for a second. So you see that this is a potential heading for trouble, right? Which, by the way, if this comes back down to test these levels, I mean, that's going to spell disaster for crypto as well, which would strengthen our theory that Bitcoin's actually going to come down before it goes up.
Very
But
true.
this is what I found interesting is I put this. So this isn't just the S&P. This is the S&P, the Russell 2000, the DJI, and the NASDAQ all in one. So it's like an index of stock markets. And if you divide it by the dollar index, look what happens. We haven't even made a new high. So what is this chart saying to you?
Well, I'm not super confident in calling exact tops. I think we're roughly near some kind of local top. It's very possible that on that other chart, it busts up to form a new high and everybody will come rushing in. Oh, it's breaking out. Time to get back in. We're still bullish. And you see this a lot in many different charts. It's called a deviation, where a pattern might seem like a breakout, it ends up being a fake out. So that could also crush shorts, getting shorts washed out of the system. People open longs and then everybody gets destroyed. So those people both get destroyed and then it comes right back down afterwards. So you could see something like that in the works. You kind of have to play it day by day, but it's spelling caution for me. I'm cautious looking at that. I'm leaning towards bearish.
Yeah. I mean, we could probably go back in time and find similar types of price structure as you come off of from a big crash. Let's see here. Just looking back. I mean, they all give this kind of like rounded structure before, and look at a lot of them. They do sell off. And when I zoom this out on a really far time frame, you see how the price likes to trend inside of some of the bands. So this is just a giant Fibonacci channel. It's just interesting. Like, I like looking at these super, super long time frames just to like get a feel for what's happened before and what's unlikely, or like just see these like this here. Like, this is a long period of time. It looks like it's about 5 years or so where it just trends it just oscillates on that 1.0 fib level. But here during this period, we've been trending one grade down from this period. So 2017 to 2020, when the COVID crash happened, we haven't ever been able to reclaim that channel yet. This is the first time we've been in there since then. So to me, it seems like a deviation that's going to come back into our yellow channel and at least test these levels in the middle of this channel before, potentially going up higher. But, that we'd look for other signs like rate cuts or money printing or some other form of thing to produce something like this, where the stock markets really start to go parabolic and break up out of these channels.
That's true. Another thing is just human psychology. And this ties in with trading, investing. I've noticed a lot of people are just extremely complacent with the stock market in general, and they expect it to only go up and to the right forever, which it has for a long time. But past results are not always indicative of future performance. And usually when you're so confident and comfortable, that's when they tend to pull some tricky moves on you. So I can see that sneaking up on people. I think people are very, very comfortable. I mean, if those long-term charts, they do look good. I mean, I don't recommend shorting, even though this could potentially be a top. I wouldn't short it because the money printing, the way the system is, it's way more beneficial to be in it. But when a black swan event does come around, when a crash does come around, it goes down hard and fast. I mean, you see COVID, it can be that times 5. And you don't really have too much time to react. That's the issue. It just goes down. It doesn't even bounce. It's another thing I've noticed with the equities. Crypto has a lot more bounces in it, where you're able to trade in between the chop. But with stocks, it tends to just go straight down.
Yeah, that's interesting. So I want to hear your thoughts on the differences of trading centralized exchange cryptocurrencies versus like DEX cryptocurrencies. If you have thoughts on ones that specifically traded on, in terms of price action or volume, or just any kind of thoughts that you might have between the two. And feel free to share your screen whenever you want. Just some thoughts on centralized versus decentralized coins.
It's unfortunate a lot of the decentralized coins don't really get as much love as they should. And the unfortunate truth is a lot of people, the vast majority of people, are still kind of stuck on these centralized exchanges. And you'll notice shit coins doing crazy moves. And the coins fundamentally have pretty much nothing. They're pretty much worthless, but yet they still make these big moves up and down. So I wish that more people would stick to just using decentralized exchanges, DEXs, and perhaps they will once the environment changes later on. I think we're still early overall of the evolution of crypto, of what it'll become in the future. So
I 100% agree with you, dude. I think we're still in like that weeding out process of like the
yeah,
first 10 years of the internet where like there was so much trash. And then, it took like 8 to 10 years for like things like really innovative real value products to come out, such as like Amazon, or like even just like on the technology side, like the iPhone, which led into the whole, smartphone movement. So, I mean, it all kind of builds on itself, and we can't ever know exactly where it's all going to go, but you can get a good feel for it, I think.
it's also just safety. I don't feel comfortable holding a large sum of money on a centralized exchange because that can easily, overnight, you can lose that money. So I feel way more comfortable on a DEX. I think more people are eventually trending towards that path, and it's going to take time,
Do you think
but we're
that,
on the way there.
do you think that in terms of like the price action in these charts, that they actually act differently? Well, I mean, you
They
said that
do,
already,
yeah.
obviously, that like a low liquid coin that's only traded on a DEX can just moonshot because there's almost no liquidity, that so it's easy to push price around. But then on a centralized exchange, you're combating, the exchange itself plus any kind of arbitrage bots they have running,
Yeah.
and
Plus,
just the deeper liquidity. Yeah.
perpetual contracts, so people will go long and short, and that will really add some nasty candles on the chart. Just like you see those long wicks, it's mainly just people getting liquidated out of those leveraged positions. And something like Hex, we haven't had that, so it's more natural looking. There's not as many of those, but there still are some because of huge whales. Just market selling. They don't care about slippage. I've seen a lot of whales. They literally could have saved themselves like 4 or 5 figures just by splitting up their sell orders. And it's really just ignorance. They don't really
I
understand liquidity.
I've 100%, and that's part of the goal with the website and axisALiVE.com, is trying to teach folks, about LP and about slippage and about reading an LP histogram, because I have had clients come do one-on-one calls with me. They're like, I went to sell $300,000 of Hex, like right here,
Oh boy.
and like right here, and I don't know why I only got filled for 200,000. Like, it's because you were selling at the edge of a wall, and that literally happened today, on this sell candle. I'm sure if we take a look here, this wick was created because this guy sold into a very low liquidity range on the LP pools.
So they're just making bots rich because people come in with the bots, MBV bots, or even limit orders and scoop that up, and they just pocket the difference. So people definitely need to be aware of that. I think another thing that's just going to take time, education. It's really good to know these things. So
Yeah, it's definitely, DeFi has a steep learning curve no matter how you cut it.
it
And
is. There's a lot to cover. Like I understand why there's a learning curve.
do you
There
think that
really
there's an
is.
opportunity here for new tools to get made? For example, let's say you're a seller and you're sitting here in this red, for the audience, this red bar is where the price is at, and left is down in price and right is up in price. And let's say this guy wants to sell $1 million of Hex right here, but if he does, he's going to push the price down to like zero, basically. And would it be helpful or beneficial for like a warning to come up, and then like on the app, and it would say, show you the histogram, show you like that there's no liquidity there, and then maybe even make a recommendation that, hey, if you're not in a rush to sell, maybe you click this button and it will automatically deploy some LP up through this range for you, so that if the price comes back up, it will automatically pull it for you as the price goes up. Imagine having that like depth, that something, an immutable contract that holds your hand through the selling and buying process on DeFi. Like that's just something that hasn't been created yet. And there's so much opportunity here to do these things, to make this like really fluid and easy to use. And I think just it's untapped potential. And where we're going to be in 15 years is going to be a totally decentralized online marketplace.
Absolutely. That's where crypto is trending. That is crypto. You don't want to give up essentially your whole entire stack and risk it. You're trying to stay sovereign where you retain control even through trading. I mean, you don't want to send to a centralized exchange. We need more limit order functionality. We need tools like you mentioned. We need a lot of things. And I think they'll be created hopefully sooner rather than later. Let me see here.
Yeah, if you put, yep, bring that puppy up, and we'll flip over and look at some charts. Oh, one other thing as you're doing that, I brought up the axisALiVE token chart here just because I wanted to make a point about the purity of price action, and because you can't like leverage trade this coin, and because it's like super scarce in amount. This is on log, and you can see down here that there's not a ton of volume traded in the first 40 days. There's like only like 400 million pulse got traded inside this particular period, but because there wasn't that much overhead sell pressure, there was a stealth launch and there was no sacrifice money out there. There was no one to sell. There was only net buyers because they needed to get exposure during this period. And because the chart printed so beautifully during this period, that's when we got the attention of some whales and sharks and Hex and Pulse. And that's when this thing really started to change its shape. And like these big sell candles here, that's not like leverage, guys. That's actually a guy that got in early down here at like $1 to $10, and then just decided to sell 10 coins all at once. So then there's that huge flush of liquidity onto the market, which part of that analysis that you guys should be doing is looking at these volume bars and looking for that liquidity as it comes on the market. Because then look, the market saw that and pushed the price back up 390% in the following day after that 80% dump. Because it's pure and it's scarce, the chart is literally just human emotions or need, and so it's kind of fun to watch on some of these on these DEX tokens.
That's a bullish looking chart. I mean, that thing is just trending up. So there's not really too much to say about it besides it just looks really bullish. Yeah, you could put a pennant around it. Maybe it'll come back to that lower side and that'll be a buy the dip opportunity, but trending up.
It definitely is. I'm proud of it for sure. Definitely going to continue to do what I can to make sure that it's successful. If were you able to pull up your screen?
I think so. Let me try entire screen.
You can do entire screen, or you can do just a specific window.
I think I did it.
I'm not seeing
Did
it.
that work? No. Mm-mm. 1 second.
The pulse chart, man, it's coming back to test the 100-day moving average right now, and I'm hoping this is like the last call before we break out of this pennant here.
I think it's making me close out my browser in order to grant permission.
Oh, okay.
Should I just go out and back in? Join
yeah,
back
you
in?
can. Yeah, feel free to just hop out and hop back in. Yeah, guys, this sell-off today, like we're coming back into the highest volume traded area on this whole chart. So this is like the point of confluence on Pulse, and this is what I'm watching for something big to happen. Definitely like juicy territory here. 100-day moving average coming into test. It's on a positive slope, highest volume traded area, huge support here from whales. So I'm excited to see kind of what happens.
All right, gonna try this again.
All right. Reading comments here.
I think it went
there
through.
We go. Yep. You're up. Sweet.
All right. So I pulled up some of the pulse charts. I figured we'd start with Pulse.
Mm-hmm.
And the way I look at things, I like to look at channels. I like to look at, diagonal resistances. This seems to be some sort of a channel. I mean, if you pull up the weekly chart, there's not too much history, so you got to go with what we have. But I also like to look at bullish and bearish scenarios. So if you're only weighing out one scenario, you're not really taking everything into account, and that could be dangerous. So, I drew these two arrows of a bullish and a bearish scenario. So let's say price just keeps getting faded. We might see it tag somewhere along this region. Maybe people will buy the dip there, get a little bounce. And ultimately, I would expect it to trend towards this bottom trend line. Now, it's not guaranteed. It's just what I would expect based on probabilities, based on what I've seen in the past. And if stuff remains bullish, if we keep seeing buyers step in, people are entering the market again. I'm sure there's a lot of people who have sold their Pulse, their PulseX. You're noticing a lot of capitulation in that community. Everybody is fed up. People are worried about lawsuits. Usually these are good things. It just helps wash away all the weak hands and everybody who doesn't have that conviction. So only the strong will remain in the end. Not everybody is meant to make gains. There's a reason not everybody is making sick gains. They really make it tough on people. You have to stick around through thick and thin. So in this short-term scenario, I would expect something like this. If we remain bullish, retest this upper trend line, maybe pull back a little bit and then break through it somewhere in this region up here. I just put an arrow around here, but
yeah, you're right around. That's actually right around the base SAC rate. So 0.00001. Yeah, so it's that's the level to hit. And honestly, right in this very moment, it feels like we need more time. It feels like we need more time, and I don't know how long that is, but that would imply that we're at least going to go down and test that double bottom area that we previously were at. And like you said, if it does head down to that zone and doesn't like bounce hard for like or so let's say right where your red line comes down before it bounces,
right here.
Yeah, imagine another W bottom there, so back to back, and then it, because of how long and like crab walking this is doing, just to create continual support there. Maybe if it does it again.
AXiS, can you hear me?
Yeah, can you hear me?
I think your volume cut out.
Oh, can you hear me? 1 second.
Yo.
Yeah, can you hear me?
Yeah.
Okay,
I think
cool.
You cut out for a second.
Oh, my bad. All right. So I was just saying that I'm at, like, you're helping me understand that if it does head trend down, it's likely going to trend back down to the base, which makes sense. Like that's just kind of how markets move. They at least test the lower bounds of the range. But I guess in my mind, I was thinking like if we come down to that where that previous W formed, which is right where your cursor is, we get another W there.
So you're saying something like this. Now, I didn't draw that because it's just not, from experience, it doesn't seem probabilistic to me.
Mm-hmm.
So in my view, if we do go here, we're most likely going lower to this band. But that can happen. What you described can definitely happen. It's happened before. It's just not as likely.
Do me a favor once, and pull up your screen share again, because for some reason it like froze.
Okay.
So I'm just gonna yeah. You have to like you'll have to like remove it.
Stop sharing.
Yeah, stop sharing and then reshare. Hey, have you been watching Teddy Bear at all?
Not at all.
Okay.
I heard about it though.
Okay. Something to keep your eye on, I think.
Can you see my screen?
Yes, I can.
Awesome.
All right, we're good. Sometimes if you're on Wi-Fi, it'll like mess up the screen share, but you should be good though.
So I even went and put some other projections, like this little white line down here.
Mm-hmm.
This would be like my ultimate worst case bear target that I just mapped out. It's kind of rough, somewhere around. This is if things just they go from bad to worse to worse.
Mm-hmm.
Something to keep in mind. I think people should be aware of danger, you know. Don't think
100%.
that it's going to be sunshine and rainbows getting through this. Be prepared for the worst and the best. I mean, I tend to think it won't go there, but you can't count it out. There's a lot of people who I'm sure still need to get out of the system before we can make a real, 100x move, like a big, big move. And whenever that does happen, it wouldn't really matter too much if you bought, here, 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 because at that point, price will be way. So that's a really great reason why it depends on your length that you're looking at of time, your length of time. There's a lot of short-term traders. A lot of trades I do are just short-term, and that's it. But if you're looking with a long-term view, that's completely different. And if we really break out of here, I would expect us to go somewhere up here.
Can you explain for everyone like how you get that target?
Yeah, so it's mainly just looking at what I have to work with, which would be all of this action in here. There's a lot of buy and sell action. Typically, people tend to buy and sell within ranges that were tested a lot. It just tends to happen. So at one point, this was a big area of resistance. So not obviously, but it's likely to be a resistance again. It's just how charts tend to work. This over here is same thing. You can draw a line here potentially.
Do you use fibs at all on this stuff, or?
Funny enough, I don't use fibs at all. So here's one thing about me and my style. I tend to use minimal indicators. So sometimes you might look at my charts and be like, how the hell did he come up with that? A lot of it is just looking at the chart and sort of eyeballing things, which some people might not like that. I have friends who they use a ton of indicators and that works for them. I know other people who use a ton of indicators and it just makes them more confused.
Mm-hmm. I'm with you. I think simple analysis is often the best.
I like keeping things simple personally.
And what I like about it is like it's either like full on bear or full on bull. It's never it's rarely just slow movement in crypto. So that kind of style actually works for crypto really well. Just looking for base resistance levels, base support levels, and then kind of like if you break this key level, it can swing super high. And I'm with you.
If you were looking at this as a trader and you were thinking, when should I buy back in? When do I have a confirmation? It would likely be if we come up and we're near this range up here in the sevens. I would say that would be pretty bullish. And buying there would most likely be profitable because rarely in charts do you ever see 1, 2, 3 tops and then it just goes back down. Typically, if you see 3 tags, it might come down temporarily and then it usually busts through. So that's what I see for Pulse.
How do you feel about
charts?
Go back to Pulse for a second. I have a quick question. Do you see how we recently made a triple top on a lower high? 1, 2,
here.
3. Yeah.
Yeah.
Thoughts on that? Basically saying, hey, we're going to go back to test the base.
That's a good point. I didn't even really notice this until you brought it up.
See, I think you could be right that it does roll down.
Then.
Good. I'm thinking more like it's do or die time. All the moving averages, like the 21, the 50, and the in the 100, they're all squeezing the price into this funnel right here. You can see it right here. It's like the bulls are going to have to step up and support. And like something that's happened fundamentally recently was liquid loans launched on PulseChain, which meant that you could collateralize your Pulse and produce stable coins out of thin air, effectively, USDL. And so there's been $26 million of USDL created. But if the bears can push the price down hard enough, fast enough, they can liquidate a lot of those funds. But the question remains is like, what benefit is it to them? But I'm wondering if there isn't going to be some sort of high volatility squeeze that happens here. You know, maybe first a shot down and then like a shot back up, where like the real funds comes back in to backstop any downside and then just ejects it higher to like protect all the vaults here that have been started at the base.
It's a good point. Whenever there's leverage involved, people tend to go hunting for those people, and I don't know what benefit it would really give them. Usually it's exchanges who do that to the people, because usually exchanges, they can see what everyone's doing. They see who's long, who's short, and then they go hunting. And whenever they wipe those people out, that's just money in their pockets. I'm not really sure who would benefit in that case. What you said about that triple top here, I thought I would just bring up that looking at the time frames is another thing, just a cross check. You go to the weekly chart, it doesn't really look as much like a triple top anymore, but then again, neither does this. So it's good to check all the time frames. And this is a pretty chaotic, it's a channel. Things can be choppy here. I would not expect a very easy confirmation or rejection. It might sneak up on some people, so stay vigilant. I tend to be a little bit more bearish personally. That's just my gut feeling, but either one is in the cards here.
Cool. All right.
Another thing I was looking at was Pulse on Ethereum. I think a lot of people forget that this exists, but yes, you can trade Pulse on ETH. Granted, look what happened. These could potentially be opportunities if you're setting, let's say, limit orders on Matcha, 1 inch, something like that. You set a limit order pretty low. And if somebody comes in, like we said earlier, and they don't understand liquidity, they don't understand slippage, and they just market sell out of fear, you might see it just temporarily go very low on a dip. And if you have an order there, well, that's just money in your pocket. It'll bounce right back depending on how it is on PulseChain. But yeah, it's an opportunity.
So you guys, when I first reached out to Zero about doing the stream, I thought the chart that I wanted him to analyze the most was this chart, which was Pulse against Ethereum on the ETH chain, so that there is a little bit of a buffer there, so that it's not so thick in the liquidity pools like it is over on PulseChain. Over here, like there's a time delay between the arbitrage that occurs, so there is opportunity over there, so that if people bridge their Pulse over to Nuke, you can definitely snipe cheap prices due to the lack of liquidity. I think there's about $1.7 million of Ethereum paired up against about $1.7 million of Pulse. So it's a little bit thinner than the like 10 million that's trading between DAI and Pulse on PulseChain, which makes the moves more volatile, which gives you these huge wicks. And so someone's clearly, you can see in the volume bars on the bottom of the chart, come in here and just been unloading like $1 million clips.
Yeah, and if you pull up the 1 hour chart, it's even more prevalent. I mean, you can just imagine if somebody had an order here. I'm sure probably almost nobody did, but you could speculate. I mean, that wick right there is around 10 to 12% just in 1 hour. So if you had, 10 grand here, could be an easy $1,000, easy 10% move for you. And it's not very liquid. Like you said, there's not a lot of bots keeping things in check with PulseChain ecosystem. I did notice that. There's arbitrage opportunities that come around all the time. I've seen it with Ethereum on PulseChain as well. So keep your eyes open. It's good to watch both chains you might find an opportunity. Granted, they don't last very long, so that's something to look out for.
And then, yeah, just before you switch over, would you mind clicking the WETH, switching it to the WETH valuation? I wanted you to, if you, next to where it says full on the top bar there, or between, there you go. I wanted you to measure see what you see in the price structure on this chart now and on the daily or the weekly. Because this is going to give you a completely different view of what Pulse is doing relative to Ethereum and the more broader market. So we've already look, we've tapped the lows here.
Yeah, so I haven't even looked at this one at all yet. It looks actually a little bit better.
Yeah, which looks like it's breaking out, right?
I would say this chart looks a little more bullish. I mean, you can even, I don't always look at diagonals, but you can go like this potentially and speculate that, it doesn't have to be perfect. Something like this, that if it does come up, that could be a breakout. Some people might look at that as a breakout, especially above. Then you can go, oh, did the wrong one. Something like that. Just watching. This would be a textbook breakout if it goes above there. I would expect that to go pretty high. But
well, with all overall, that, redistribution of supply right there, and then like the volume, and then the support, like it's clear to me that somebody's actively supporting price there. Whether it's an individual or the market as a whole, like somebody's actively coming in and buying up those dips, and
absolutely,
I just, it looks ripe for some volatility.
I could see that. I could see that happening. But other than that, I don't have too much to say about it. It is still chopping, but it does look more bullish when I put it in the WETH pair versus USD. It's pretty interesting.
Mm-hmm. Cool.
I'm gonna pull up PulseX. Now PulseX, I'm actually more bullish on PulseX for a few reasons. I think they're more just fundamental. Well, first of all, the sacrificers, they're down way more, which is good news for anybody who's not in it yet, because you're getting something. I mean, people are less likely to sell when they're down, 90% versus Pulse holders are down a lot less. So usually people do capitulate on selling at some point. So there's that. Also, there's the fact that it's not inflating and it's burning. Music to my ears.
Mm-hmm.
And then there's also the point that Pulse has validators, and those validators are getting rewarded. So essentially that's a little bit of inflation for Pulse as well. There's also more farms for Pulse. Well, actually, I don't think the farms are as big of a problem. I'd say more so just the validators. That's a little bit of inflation coming in. PulseX doesn't have that. So I'm a little more bullish on PulseX. However, I think they're going to trend roughly the same until big moves happen. So pretty much have the same idea. Channel, if it comes down around here, which this was a key support because there was a lot of points of contact here. So this was a great support right there, but I wouldn't expect it to hold support twice, although it is possible. I would expect it to come down here. Bullish case.
I'm with you. I think if Pulse comes down, this one's going to go a little bit lower.
Yeah. I agree. Yeah, I tend to agree with that. Bullish case, same situation. Comes up to tag this trend line and ultimately goes higher somewhere. With the big moves to the upside, it's kind of hard to call tops. Usually you have to wait and see when it actually does happen. Then you can get a better picture. So that's why I don't usually like to analyze too far in the future. You got to go shorter frames first, but something like that.
That's probably a good point to talk about just slightly. Let's talk about the trader's mindset versus an investor's mindset and the difference in the time frame of those two types of folks in regards to like how you're probably thinking about where can I get the most optimal entry and the most optimal
Yeah,
exit within like a relatively short period of time. So I'm taking the least amount of risk
it's a
versus
great
someone
point.
longer who would just wait on the sidelines and have have income stream that they're going to allocate X percentage of that income stream to DCA in. And then that strategy should be looking for the best buying opportunities, which would be like what we gave you before on the Pulse WETH pair. We're just putting limit orders in there would be you'd be able to snipe up better and better prices if the price like were to test those lower levels.
So for most people, being a trader is not worth it. I tell people that all the time. If you're expecting to become a crypto trader, a stock trader, it's probably better to not, to be honest. There's only a small percentage of traders who are consistently profitable over time. It requires a lot of time on your end to check in on the markets, like you said, every day. So most people are better off focusing on their job and really just depositing that capital into the market. And for those people, you want to stay away from, the 1 minute charts. You're going to the weekly charts. You want to see the big picture.
Mm-hmm.
Now, like I said, these ones don't have too much data, but Hex does have a lot of data. So Hex would probably be better to get a bigger picture. We'll go over to that one in a second. Another thing that I tend to do, I have a long-term portfolio and I have a short-term portfolio. So I separated the two because it helps me have one where I have a trader mindset. The other one is long-term. And in the long-term one, I don't do many buys. I don't do many sells because if you're over trading, that's a really quick way to chop yourself up into pieces.
Do you ever find
Most
yourself
people,
where you like take a percentage of your like let's say you had a really huge win on your trading bag? Do you
yeah.
allocate a portion of that winnings to your long-term stack, or do you just or do you like get free rides out of them, or does your trading bag just grow indefinitely?
For me, I keep my trading bag separate. It just grows. But I started off with a very small trading bag. So I was able to grow that from peanuts into something big. So I just keep it apart completely. There's no rules to it. So it's really whatever suits you best. For me, I just want to see that historical performance. You can even compare your trading bag to your long-term portfolio. I don't know why I can't say portfolio today. And you could speculate like, wow, I actually outperformed myself not doing anything. Maybe that's the case. For most people, that's the case. Like if I would have not traded, I literally would have had more. And for other people, maybe you did outperform the market. So it's good to have both. It's good to separate them. And long term is always bigger. Short term, smaller trades. You don't want to be going in with your whole entire net worth on quick trades. I don't recommend it anyways. Some people do that.
Yeah, one thing we've noticed in our group is that folks will like enter like a leverage trade. Maybe they'll use Fame or they'll be leverage trading on a centralized exchange, and with any amount of leverage, whether it's 3x, 5x, 10x, 20x, 50x, you have to have like a hard time stop no matter what. Because when you're taking a leverage position, you're not buying the spot asset. So you don't have anything to hold on to anyway. But even if you did, you're paying a funding rate to keep that position on. And I've had to say this a couple times now to my group is like when you take when things look good and indicators are lining up and things are getting bullish and you're long in a position, you don't just leave it run forever hoping for us to go to sack rate tomorrow. Like if you start to get any sort of bearish indicators at the top of a price move, you got to close the position and profit or you'll quickly find yourself underwater. Like that's just how the leverage game works.
Yeah, that's when you got to look at the chart. And this is why I have both scenarios. You have to think about invalidations. When does your thesis become incorrect? So first you start off with your ideas, and as time progresses, you can add in those invalidations or you can have them preset, but you have to have with leverage, you definitely need a stop loss. if you don't have a stop loss, you can even get destroyed by a scam wick. It happens all the time. Exchanges, they'll go hunting. And if you don't have a stop loss in, it might wick up, liquidate you, and then come back down. That is the worst. You don't want to experience that. But always have a point where you cut your losses with the short-term trades. Very important.
Yeah. So at a bare minimum, guys, have a time frame in mind. Like look, if my thesis is like, let's go back here on this chart back to the previous low, right? Yeah, right where your cursor is there. Perfect. If your thesis was, all right, we got a triple bottom on the 4 hour and it's about to break bullish because we got a MACD cross that's bullish, and RSI has just cleared the 50%. All right, I'm going to go long here. And you go long and you ride that whole thing up, and you're like, this thing, my idea is that it's going to go to sack rate, but it doesn't get there by mid-November. Like, you've already been in the trade for like probably way too long, and you've stomached that volatility on that first drop and rode it back up to a new local high, and then started to see signals come in. If you're still holding on to a position for that long and you're not taking it off the table, reconsider before you enter a position to maybe have like a time limit, like that you're willing to be in the trade. Like, if it doesn't get to base sack rate by this time frame, then I'm going to close the position regardless of where it's at. Stuff like that can really like get you taking profits, and you can't go broke taking a profit.
Absolutely agree with that. Everything you said. Time frames are good because it adds something definite versus leaving it up in the air and trying to go by feel. Your emotions can play games on you guys. It happens all the time. You might, if you don't have a plan ahead of time, you're going to be coming up with all kinds of reasons why you should stay in the trade. It might be a losing trade, and then you're not going with a plan. You might be adding to a losing position. Before you know it, you're just underwater. You have no powder left.
Stuck bag holding.
Yeah.
Hey, for this PulseX chart, can you switch to the Pulse valuation, same way we did the ETH valuation? I just wanted to see if you were seeing the same things I was here. Yeah, it looks like a nice W double bottom here forming against Pulse. So this implies to me that PulseX is actually it's holding up pretty well in Pulse terms. And so then, to your point earlier about PulseX going down and even maybe going to breaking lower, would even be true under this condition if Pulse breaks hard enough. Because even if this ratio stays the same in dollar terms, if Pulse goes down, PulseX is going to go down with it because it's getting its dollar valuation from what its Pulse valuation is. But in the meantime, I'm seeing a nice clean double bottom forming here on PulseX in Pulse terms.
I would agree. It looks like it's having some pretty good support. This looks more bullish than bearish. And again, you can just go to a channel here on the short frames. Something like that.
Yeah, so then if it was to break that 0.26 level, you'd basically close your position out, because you'd be saying, all right, well, if it breaks that level, I'm out until it makes until I get confirmation of a new bottom being formed somewhere.
That's how I would look at it, but I would wait a little bit. I wouldn't do it immediately, because you can see here, look at these wicks.
Mm-hmm.
It is a little bit chaotic. Mm-hmm. Sometimes there's slippage. So if it closes outside of here, you have, maybe like 2 candles, then I would.
Mm-hmm. Okay.
That's how I play it.
Good to hear. Yeah, I always like hearing people's different processes. Like you telling me that you'd wait for candle close and then 2 consecutive candles. Basically, what he's saying is you get, on this time frame, you're getting 3 days of time to like basically decide, is this thing going to hold or not? And by a day and a half to 2 days, you'll pretty much know. But that 3rd day candle close, you'll have confirmation.
It's important because there's a lot of fake outs that will occur. It happens all the time. They'll break out and then just go right back in. And if that happens, you might have just been shaken out. So I like to know for sure, especially with a chart like this. It looks like there was a lot of wicks going on.
Oh yeah, I think you know, you can even tell in the community sentiment, people stop talking about PulseX a lot, and then you get that kind of action. So people think it's dead, but then you see the reversal where it got saved, and it's like, well,
Yeah.
no, it's not. Is it dead? Is it not dead? And the truth is, guys, no, it's actually looking pretty good. PulseX looks good for if it breaks out above that 0.28 pulse per PulseX. I mean, it could basically go back up another 20% in pulse valuation.
Yeah, I mean, the next target I would see would be around all of these highs.
Yeah.
That would be a big move, I believe. Let me check it. Yeah, that could be 12% gain right there. And it potentially even higher. That could go all the way back up to here, somewhere around here.
Mm-hmm. I've been eyeing up that 0.4 level, which kind of where that first breakdown occurred. So
Yeah, this doesn't look like it would stop here. When I look at this chart,
this time
daily,
it doesn't seem like it does it because
No.
the only way this one's going to move is if Pulse is moving. So if Pulse is performing, PulseX is just going to slightly overperform it.
this would
Yeah, it's
probably
exactly
do
where I'm looking.
something like this, somewhere around here.
Yep, 100%.
Yeah, I like
Don't
PulseX.
fade it.
It's my favorite one. It's my favorite one right now.
Sweet, cool. I'm glad we could get some info out there for the folks, all you fine folks watching.
This one is Hex. You know, I did have another idea. I think you saw it on Twitter. I had some kind of a pennant forming. It could still play out. This could just be, like you said, that whale.
Yeah.
The whale who just created that little capitulation wick, but it ends up being overall a similar idea. If price doesn't pick up soon, I would expect it to retest this trend line, and you have to take it from there. You can't assume that if it goes to here, it's going to go right back up. You have to take it day by day. It could do that, or it could chop around here. It could chop around here for a while and break a little bit lower. That would be a bad sign. Or could chop around here, and that could be the Pico bottom, and then just shoot straight up. I tend to think that things have already seen most of the worst. I don't think the Hex and Pulse ecosystem have too much more pain ahead. I think it could take some more time. I think time is the real thing that we need, is a little bit more time. But I'm starting to get more bullish on it overall. I see a lot of people leaving the door, exiting left. Those are good signs, guys. You don't want to buy when people are cheering and rooting and, oh, look how much we're up. It's hard, but these are the times when you usually want to enter into assets when there's a lot of pain, a lot of FUD. So this is Hex. I could see it making a big move because it just looks so oversold.
Yeah.
When I zoom out, look at that. There's a lot of thin air up here.
Yeah.
So this thing, if it gets going, it can easily, there's thin air and there's not that much liquidity. So, I mean, there's only so much Hex that can be bought before it just starts making these type of candles over here.
It's like 90. It's like 90 million, which 90 million times, let's see. It's like $500,000, dude. That's it.
That's it. So this is bare minimum target somewhere around 1.5 cents.
Dude, I'm looking at 1.7 again, and it's up to 2 cents, somewhere in that 1.7 to 2 cent range. Definitely is like the first, you know, if this is like an inverse head and shoulders pattern playing out, which now the right shoulder is a little bit too deep to be called that anymore, but it did definitely look like that as it was building that pennant structure out. But yeah, I mean, even if it plays out similarly, that's where I kind of see it going. If you break that 1.1 cent level, there's a old data point I found recently. I don't know if I want to show it publicly. I might show it to you afterward, but it's like the way the LPs pools were set up when the big crash happened. And so you can actually see where the market makers had liquidity set, like going back on June 2nd. And when you look at it like that, it really shows you what key levels are going to be there, where they're going to be where the price is going to either stall or break.
Yeah, definitely show me that. We'll keep it secret for now.
Yeah, we will. We can't share everything or people will counter trade it. I've been dealing with that for a couple of years now. Sometimes like back in the day, like let's see 2021, I like made price calls and everything played out perfectly going in the bull run. And then like I'm talking like down to like the decimal of a penny for Hex. And then we got into 2022 and people were definitely counter trading what I was talking about for sure. So I got kind of quiet for a while.
Yeah, you can't reveal all your tricks. You can give a few out here and there, but so that's EHEX. Man, just the more you zoom out, the more it looks so extreme.
You remember that tweet that I did where if this follows the Bitcoin 2019 and 2020 like COVID fractal, this thing's going to shoot up to 3 to 5 cents, you know, in the next few months. Like within 6 months, it'll be up, you know, between 3 and 5 cents. And then we could even be testing like 10 cents this year. And it doesn't seem that far fetched considering we were at 12 cents last March that would be possible. I think it really just depends on sentiment, and it really is only going to take like one or two whales to just set the bottom and really push it up and confirm that the lows are in, I think. Because we're not getting another PulseChain fork, so you're not going to get another dump like we had at 8 cents last year. Like that's,
Yeah,
I just don't see that.
I think that's coming. It's coming, but you have to question, is it coming sooner or later? So we might just see something small at first, and then it might pull back for a while, chop for a while. But eventually, I really do think we'll see somewhere around 5 cents on EHEX at least. And remember that there's two hexes. So that combined price would be pretty high. It might be 10 cents, 12 cents, 15 cents combined. That's a pretty substantial move from where we're at now.
Yeah, that's huge.
We're talking,
it's like 20x.
You know, 10x, maybe
it's
more.
Just from the lows at 003 to 3 cents is a 10x.
What else do I have? Yeah. This is PHEX. And I drew a diagonal on this one as well. It seems like it has more of a clear diagonal channel.
Hey, your screen froze again.
Let me see. Am I back?
You're back.
All right, so now we're on PHEX. And I drew this diagonal trend line just because it seems more clear cut than something like EHEX. And we're going to have to wait and see, guys, because right now this isn't a midpoint. You know, it can start recovering or it can keep bleeding out. We don't really know yet. We're going to have to wait and see how this plays out. Now, it's a similar idea to the others. If it comes down here, it might bounce, have a bounce off of this trend line, chop around. If things get really bad and it breaks below, you might just see a long period of, it could be this or it could be sideways. It doesn't have to go down. But if stuff got really bad, this is like the last piece of data that there is, this little wick right here. I mean, we don't have anything else. So I would assume that if things got really bad, it would come down to 0.003. Right now, 0.008. So that would be a pretty big drop. But if things break out, be seeing some green candles. I would expect it to go at least to 1.5 cents right here. Hopefully up here in this region, maybe even higher. You know, you can't, that's the thing. This is more of a short-term analysis, guys. Things can go way farther than this, or I guess lower as well. But I'm looking, you know, a few months ahead. I'm not looking years ahead with these arrows.
That makes sense. And to your point, like with the downside's like I think more limited, whereas the upside is a lot more,
Yeah.
you know.
The risk to reward is becoming better. That's what that means. You're facing less potential downside risk as price goes lower because there's only so much selling that can occur. Eventually the odds are just going to flip in your favor, and it's going to be a no-brainer for people to buy if it gets low enough. So you always have that working for you. Risk to rewards becoming better. Yeah.
Big Fudge asks how high can Pulse go in 2024. We did the Pulse analysis already. I think you're gonna get maybe 2 to 3x off sack rate. Well, maybe it's possible that it tests the all-time high this year. It's possible.
This is Pulse again. Yeah, all-time high.
You know, maybe you fall short of it, but yeah, I'm with you on this. Like I was gonna say 200 to 300% gain.
Yeah, this would be my 2024 bull target around here. I don't think people would let it go right up to this top. It's possible, less likely. Like I said, there's people who front run.
Yep.
So people have huge positions. They're going to get really antsy and they're going to want to start taking profits sooner.
Ethereum did
Everybody
this,
sees this.
in its early days where it
Yeah.
broke out like this and it went up to like a similar range and then it just went sideways for like 9 months where it was just like getting rid of the dead weight up there. Guys that had, 250K, 500K, $1 million positions that went up to like 3x. Like those guys, they just want to get out at that range. And so
That's more likely, I think.
Yeah.
Oh, I guess I have ink here too.
Oh
There's
boy.
not too much to say though.
There's no data. It's just
So
smoked.
you guys have to remember this is very much tied to the farm. And as long as those farm rates are elevated, being 30, 40, 50% APY, it's very difficult to come in and think about buying spot. You could do it. I'm sure one of these days, Inc is going to have a giant candle to the upside. It's going to happen. I mean, look, the market cap is pretty low. Granted, it's inflating, guys. It's inflating. So this market cap, yeah, the price went down, but the market cap is still around where it was over here. Remember, now it's still 11 million, and look, it's lower because there's more supply. So I think market cap is a good thing to take into account if you're thinking about trying to buy Inc. You got to have crazy risk tolerance. This is more of a degen play. You might make a nice come up, but you also might get destroyed if you hold it for too long. The longer you hold it, the more you're at a worse position. So just think about that.
Yeah, 100%. Really good analysis on that one. This one's
High
more
risk.
like a fundamental, and definitely be watching the market cap and thinking about how much it's going to inflate.
This is just traders, guys. This is like people going in and out. They just want a quick pump and they're out of it. So don't fall in love with Inc. Another thing that I pulled up was GoPulse, and people will say, I've heard Richard say it too, that market cap doesn't matter, but I tend to think it matters, but it's not everything. So it's something that I take into account personally. I like how they have include OA on here and exclude, so you can see the difference. Granted, Richard's not dumping as far as we know, so it's not a big factor.
Yeah, whenever I'm doing analysis, I just go with the user supply. I don't ever really include the OA. I think that for all intents and purposes, for your average, analysis,
that's the way to go.
You're not going to need it. Yeah, it's pretty cool.
When you look at these, you can see how much cheaper PulseX is. We have to do a 3x to catch up to Pulse. Granted, I think it should be cheaper. I don't think it should be the same market cap, but it happens. Stuff can get temporarily overheated.
Mm-hmm. And I think if you go out on like a So this is kind of like leans into my strengths as an analyst. Is like if I'm looking out on a 10 to 15 year time frame, there's a possibility in there where PulseX does get tremendously overvalued relative to Pulse on a super long time frame because it's ultra deflationary, and assuming that it comes with even more utility down the road.
Yeah.
I don't see why it couldn't at some point flip Pulse in the ratio for a period of time. And then my next question was about the bridge. If you look at the bridge at all ever, or use that in your analysis.
I actually rarely look at it. I have not looked at it in a long time. Before we switch off of this, another thing, I remember when Hex market cap was like almost 200 billion. So these can get really high. Don't think that, this being 2 billion already means that it's not going too much higher. These can get really high. I remember this was 150 billion. So it's just something to think about. So the bridge, where do I see the bridge
If you go under
stats?
stats, it'll be under stats, upper left bridge. Yeah. So this has been sitting around $70 million for a while now. I think it was a couple weeks ago, we saw 1,300 ETH. It was like 1,300 ETH went back to Ethereum. And some of the biggest come ups in terms of the dollar value bridged in from Ethereum was actually when EHEX did that 3x price move, because we had like $7 million of EHEX over here that then turned into $21 million, which virtually lended value to the network. And then people were flipping EHEX into everything else, which was pumping everything else with it. And so it's just like, it's interesting to watch this dynamic on here and apply it to your analysis. If you start to see lots of new stable coins, ETH or Wrap Bitcoin come across, maybe that means that big new players are entering.
It's funny how that works. It's like a chain reaction. So I use this a lot, especially with the Pulse ecosystem. Let's say that only one of them starts making moves. Well, usually people will notice that and they'll go into the other coins that have not moved yet. Granted, they haven't moved. So if you see, for example, PulseX, imagine it went up 20% in a day. And then you look at Hex, it might only be up like 5% or 3%. It could be smart to put some money into Hex in that scenario, because one coin is moving up. Why wouldn't the other ones follow suit? Those are indicators as well. Something to think about.
Mm-hmm.
Even the same thing with Inc. I think the last rally, I noticed Inc was making moves. So Inc is potentially a good indicator as well. I don't want to put too much weight on Inc because I honestly think it's just doing his own thing. But
I always wondered if market makers wouldn't at some point step in and just send the Inc price to like re-incentivize the farms. And would that come off the back of some kind of update to PulseX where Inc gets more of a utility added onto it or not? Yeah, it's definitely it's in my back pocket right now.
Yeah. So that's pretty much everything for Pulse. I don't know. Is there anything else you want me to cover?
I see Wojak you got up there. Are you watching that?
I'm watching it. I'm not in it right now, but I'm interested in it.
Yeah.
Mainly because it did catch a lot of hype on the last meme cycle. And I like the Wojak memes. And I noticed that the market cap is on the lower side. I kind of get turned off by Shiba Inu. What's the other ones? Shiba Inu, Doge. Dogelon even. Those ones are pretty high. The market caps are like $1 billion. So if you're going to go in meme coins, you might as well go into something that's smaller. But this could be a potential play I would honestly like to see it come down to here. Kind of looks like the little channel that Pulse had, if you think about it. So you might see it tag here. This could be a good trade if you're short term, you're in a short term trade. If it comes down here, this could be a buy opportunity. Get a bounce, get out, or maybe you just want to hold it into the next bull cycle, and maybe you'll see something like this. This is only April, actually, in a few months, potentially. Like I said, you can't see that far into the future. Just an idea.
Yeah.
So that's Wojak.
Yeah, I mean, when you're analyzing like a meme like that, are you also looking at things like Harry Potter or Sonic Bonateni or whatever? Like, are you looking at other coins that have performed well in the last year to see if there's like similarities in
Yeah.
price action? Yeah.
Yeah, you usually want to cross check. I mean, if you're going and looking at, I mean, Pepe, that's the other one. I don't know why I couldn't remember it.
Dude, I was watching. This was like expert execution on the launch of this one. How they set up the liquidity and like
It
initially,
took off
dude,
quick,
it
didn't it?
just seemed like they caught fire in a weird way. Was it by design? I tend to think they even used the Uniswap V2 pool to launch it, so that we get that effect of like the pump. It's the pump proven technology where it's as a market maker. It's way more fun and easy to use V2. It becomes more complex like chess when you're dealing with V3 and there's like people are throwing down like sell liquidity walls and then you got to be adding and removing liquidity. Whereas on V2, it's just simple. It's like an infinite range of coins at a certain ratio and you can just absorb certain price levels and then the ratio you can pull. Anyway, it's just two different games and I feel like with Pepe, they nailed the launch doing it on V2.
See, I wasn't even aware of how different they were. So you're talking a whole different language to me right now, but that's actually good to know that there's a. So you're saying it's because of the way that you can use the V3 functions with the liquidity walls that it
Yeah.
changes things.
Well, so yeah, well, let me pull something up quick and then I'll show you what I'm talking about because it's worth knowing. It's something that everyone should know. So like I'll just use let's look up Pepe once. So just here on the Hex chart as we're looking at it, like the price is at the edge of the bands, right? And so there's no bid support out here, right? I'm assuming you can see my screen, right? Let's see here.
Yeah, I can see it.
Okay. I hear the Pepe WETH. So let's see what Pepe WETH looks like. Okay, so this is the amount of Ethereum sitting behind price supporting it. Each one of these bars is about 5 ETH. So this is 5, 10, 15, 20, 25, 30, 35, 40, 45. Let's just say there's 100 ETH sitting here. And that's the bid support. If so you could actually calculate you could look at the chain, you could see like, okay, this guy's selling and he's got 3,000 ETH worth of Pepe that he might be able to sell. He's already selling us down. And then, a market maker might pull this LP up and just like make that guy eat mad slippage by selling into thin air. And then they can pump it back up because there's no liquidity out here. So it's easy down, easy up. The less liquidity, the less economic resources has to be used to pump it back up, right? So, but in this case, what we have is a setup right now. That was just like a small like theory strategy. But here, what we have is just this 100 ETH sitting here. Plus, these little bars are 4.7, 5.2, 5.2, 5.3. So let's just say that there's like 150 ETH sitting here. But then there's all this overhead sell pressure of billions and billions of Pepe. So unless someone's going to buy up billions and billions and billions and billions of Pepe, like this price isn't going to easily move through this range. Like it's not going to just shoot through here without like a market maker coordinating it. Now, this is dynamic, so this can always change. People can add and remove Pepe liquidity on this side of the price line, or they can remove ETH liquidity on this side of the price line. Does that part make sense at all, where you can only put Pepe above the price for sale, and you can only put ETH under the price for buying into? Basically, think of it as it's like if you're selling Pepe, you're buying ETH. If you're selling ETH, you're buying Pepe. and the red line is where we're at currently, and this is where the liquidity is sitting. It's decently high. It's like 14.3 and 1.85 billion Pepe is like where we're at in terms of valuation.
So
But anyway,
basically, it's a lot harder to get sick gains off of a giant God candle because there's all that sitting there, unless they remove it, which they could. It's dynamic.
but this is also like probably tens or 20 or 100 users that's putting this liquidity out. So you can't coordinate everybody and say, hey, everybody remove your liquidity at once.
Yeah.
But when an asset is on V2, there's none of this. It's just one infinite range, and there's just a ratio of coins. So on, for example, if you had 10 Pepe on this side and you had 10 ETH on this side, the ratio is 1-to-1, right? Because you have the same amounts of both. So the price of one Pepe is the same as the price of one ETH in dollar terms. But as soon as you remove, let's say you use 5 ETH, or you put 10 ETH in the pool here. So you added 10 more ETH. You went and market bought. You used 10 ETH to market buy Pepe. You added 10 ETH. Now you have 20 ETH over here. And then you got to take out 5 Pepe, and there's 5 Pepe remaining. So the new ratio is 5 Pepe to 20 ETH. So now Pepe is 4 times the price of an Ethereum because the ratio is 4-to-1. Does that make sense?
That's a big difference. Yeah. Makes sense.
So the net here is that these ratios can change, but you're not dealing with bids and sell walls anymore. You're just dealing with assets becoming scarce or becoming less scarce against each other on an infinite range, more or less. And if there's only one provider, like one liquidity provider, then you're going to basically be paying yourself. You're back up now. Because you'd be buying into your own liquidity effectively. So I mean, it's just a different game. And I feel like when they launched Pepe, they owned all the supply. They put it all on the market. Then they used their own ETH to buy up all the supply, and then they were depositing their own ETH into their own Pepe liquidity, and then they could just recycle the Ethereum over and over and over again until other market participants came in. And what they net was, they got a lot of their ETH back from buying their own Pepe liquidity, and they got big green candles out of it as a marketing pump.
It's pretty sophisticated. I don't think most people are aware of that. But I do feel like I have a bit of a better understanding now that you explained it.
Awesome,
V2
dude.
versus V3. Wow.
Oh, yeah. The AXiS chart didn't get that way on accident.
What else do I have? I have the last thing I was going to look at was Ethereum, I believe. It looks like it had a little bounce. This is the weekly chart. I'm sorry, it looks kind of chaotic, but I was drawing a lot of things.
I've seen this on Twitter. You're just drawing.
I posted this on Twitter a couple times. I'm pretty bearish. I'm not expecting anything good to come out of 2024 with ETH, but I could be wrong. So I still do hold some just in case I'm dead wrong. But I just think the sentiment is way too off balance right now. I'm seeing a lot of extremely optimistic sentiment. Meanwhile, things don't look that great to me. I can see things retracing. This is sort of like a big channel here. It's pretty rough though. And another thing about Ethereum, Bitcoin, these market makers, they're pretty sophisticated. They don't make it easy. They're not going to make things so clear cut. And there's a lot of traps. So when this broke out of here, I think a lot of people got extremely optimistic because that's a definite breakout. But as you can see, it's been chopping around ever since. This is not really what you like to see. You like to see follow through. I was initially pretty bullish. I was expecting it to go up to 26, maybe even 28. But after the last few weeks, I'm not so sure anymore. I'm leaning towards this is over and it's going to head down.
Some quick thoughts that I had on this was I'm with you. I think ETH overperformed in the bear market in terms of it made a low at 800 bucks
Yeah.
and never looked back. And so it's really just been less volatile than Bitcoin in some ways and just slowly trending up, like crab walking its way up. And it's been really unimpressive overall in terms of like what we expect out of a cryptocurrency like that. And then as soon as those gas fees got bananas, like last week or 2 weeks ago, I forget when that was, maybe a couple weeks ago now, and they were going up into the hundreds again. I think it was like a shock to everyone. They're like, screw this. And then I think the gas fees are really slowing down Ethereum's price action a lot.
Yeah, it definitely is. I mean, it's like a barrier to entry. And if you don't have a lot of capital to play with, why would you, even if you have $1,000, I mean, you're going to be spending potentially $30 to buy, $30 to sell. Just buying and selling is already going to take away 6%, just like that. It's not very attractive.
Mm-mm.
It's mainly right now for people who have larger sums of money because, if you're trading 20 grand, 50 grand, it's not as devastating to pay $30 for a swap. But yeah, if you're starting small, it's pretty difficult. You got to go into the layer twos. And
That
that's
kind of,
just,
I was going to say, that kind of explains why the DeFi market as a whole is kind of lagging behind. It's like people, if they're trading, they're just trading ETH on an centralized exchange, so they're
yeah.
avoiding gas fees, or it's just whales on ETH. But that's like the perfect segue for like an alternative layer one op solution, with cheap gas. Like it almost makes sense that the new layer one protocols that are going to matter is not going to be Ethereum. ETH will just be like the old rusty store of value version of the EVMs until they get their gas fee thing figured out. I wanted to hear your take on that, but also maybe the ETH BTC ratio, and then we can wrap it.
Yeah, I think more people are using layer twos. So one that I like to use is Arbitrum. I don't remember if I have it on my list. I think I might have taken it off because it made a really big rally. And I was like, I don't want to see this anymore now that I sold it.
Yeah.
Because I did have some, but people are moving to L2s because you can do a swap on here with the same liquidity, maybe a little bit less, but it's almost the same. I mean, you're not going to get very much slippage at all trading Ethereum, trading even some other coins on there. And it's going to cost you like 50 cents, which is amazing.
Mm-hmm.
But I mean, even with that move we had, this is still green today. So that tells you a lot. People are using these. They're definitely using them. Arbitrum, Polygon, Optimism. I still wouldn't put too much money on them though, because they're in early stages and they're not as decentralized as Ethereum at the moment. So just be aware of that. There's a little bit of risk.
Yeah. Did you look at Metis at all? I'm pretty sure
Which
you did.
one?
Metis.
Metis, no.
Oh, okay. Someone was asking in the chat about Metis, and I guess that one had a huge move.
I didn't see that one, but that's good to know. Metis. So my projection for Ethereum, well, I had this trend line here. It broke through. It's funny. This is Kraken. Kraken, they always have scam wicks because they're pretty illiquid sometimes. So
Uh
this actually went really deep. But we had a significant down move today. A lot of people got wiped out. I'm not expecting this to go back up. It could happen, but the odds of this just doing this now are a little bit less to me.
Yeah, no, I'm not seeing that at all. I think we need some time.
We need some
Here.
time, and you might see it go sideways around here somewhere, or it could come to this other channel here, which ties into the bottom we had in June 2022. Like you said, we've just been grinding up, touching this line here. It would make sense if this becomes some kind of support. If we do go lower, you might go there, touch this, bounce again, test it again, go through it. And if we go through this, I'm sure a lot of people are going to have a different sentiment than they do now. I tend to think that somewhere down here, 1200 range would be a really good buy zone, safe buy zone. Granted, I don't know if this is the bottom. It can definitely go lower. It can even go below here. One thing about crypto is it can go a lot lower than you expect. It can go a lot higher than you expect. So have a plan, but recognize things can get pretty overblown. You might see this just, it could go to $600. I'm comfortable with buying this around 1200 personally. I think the risk becomes a lot less. There's a lot of people sidelined who have been waiting because not everybody got this move. Not everyone got Bitcoin at 15K. But if
I'm with you. I don't think that the market makers are going to give people the lows again this cycle unless we break away from the 4-year cycle. That's my
yeah,
thoughts. I'd like to think that maybe you'd get a chance to buy one more time down there, but it's just never. Even when the COVID crash happened, we didn't go quite as low as we did, and for all intents and purposes, you could have maybe got 5,000 Bitcoin, and below that was pretty tough to snap up. But yeah, no, I'm with you. I'm definitely bearish right now on the. I've been calling for the last couple streams I've done over the last few days. I've been thinking about that 31, 32K Bitcoin region, and then trying to like extrapolate out, well, how's that going to affect altcoins? How's that going to affect Ethereum and everything else?
yeah. I tend to think we could even go lower, but like I said, I'd be very comfortable buying near the previous lows. Even if it does go lower, I'm not going to stress out about it. Like, let's say prices do return to these lows here, 1200. If it goes lower, I'm not going to freak out. I would be very satisfied with that personally because, like you said, being on the sidelines is also a risk. So you have to find your own plan that works for you. I think this is a lot safer of a buy, but I could also see the case that it has some kind of huge dump just wiping people out. I can even see Bitcoin going lower than people expect, but I'm not going to sit there and wait with all my cash for it to happen. So that's something to recognize.
I think those at some point it's like what price does everybody just start aping back in, right? Like if it's at
Yeah.
25K again, it's like dang, better
Yeah.
take it while it comes.
I can see something like, sorry, I'm flipping around these a lot. I just mapped this out, just speculating. I think this is a bull market. I don't think we're getting this right now. I think more time is needed. I think 2024 is going to be a boring year or a down year.
Mm-hmm.
And then I think coming into 2025, we might have some more clarity, might be setting up for a real bull market, bull run, seeing things like ETH going to 10K, somewhere around there. And this would just take everything straight up. Because like you said, it takes Bitcoin and Ethereum going up sometimes to have that liquidity be extracted, and then people have more cash because they're selling out of these, and then they can go into the altcoins and put millions of dollars into those. And a few million in an altcoin, that sends it up a lot, like crazy. Doesn't take much.
Yeah, dude, I'm really looking at that Benner cycle theory chart, and I'm seeing 2026 all over that thing, and it makes sense that the market's getting huge, and institutions need more time and more regulatory. More time is needed across the space as a whole, and so that just makes sense that the market is growing, maturing, and it's going to push the cycle out farther. And then going past 2026, the volatility is going to get squeezed out of these markets, and especially the big ones like Bitcoin and ETH, and it's just going to become institutionally fortified. And then
Yeah.
you're going to be looking at like potentially like a decade of just blah price action where we need like a full system reset. Like this will be like probably one of the last bigger waves, and probably the end of the whole 4-year cycle thing, because that whole 4-year cycle thing was all based on Bitcoin halvings, which those halvings are just not having the same effect anymore that they once did when Bitcoin was going up hundreds or thousands of X's and you were reducing inflation by half every year. And when it was going from 50 to 25 Bitcoins and 25 to 12 and a half. And looking at the mining fundamentally, that's where I came from, was from the mining side of things. and understanding that deeply is like the halving is going to have less and less of an effect on price action going forward.
Yeah, the one thing I do worry about with Bitcoin is it just having too much of an S curve. And when I look at this logarithmic chart, it scares me a little bit because I remember mapping out the Elliott waves. I don't know if you ever look at Elliott waves, but
Yeah, your screen froze again. You want to pop that back up one more time?
yeah.
Yeah, I'm not an expert in them, but I'd like to listen to analysts talk about Elliott wave theory. There's a lot of I'm curious to see what you got. Yeah. Have you heard about that Koosh guy? He's talking about a flat top correction and then a new explosive move, I think in end of 25, early 26.
I haven't seen that, but when I went to the Bitcoin log chart, it worried me a little bit because it looks like a textbook Elliott wave topping pattern. Can you see my screen now?
Yep.
I'm not sure. So I just mapped out the waves. I mean, this is starting from, basically where Bitcoin started, pennies free. I would consider this wave 1, wave 2 consolidation, wave 3, wave 4. And these Elliott waves, they're typically, there's a few different types, but this one is 5 waves. It's the most common. To me, it looks like there's 5 waves. I don't know. It seems...
This would have your C wave coming down to make new lows.
I mean, it seems like the top of a rainbow. People love talking about the rainbow charts. We know what happened to the Hex rainbow chart on Hex.
Let's not hang that one out.
I don't want to. Yeah, that one's going to bring in some pain, but this kind of looks like it could be seeing some trouble. I don't know how low it's going to go, guys, but like I said, expect the unexpected. What if something happens with Michael Saylor? I mean, that guy has like 1% of all the Bitcoins. Mt. Gox, I know Richard talks about Mt. Gox a lot. They have a lot of Bitcoins. Supposedly they're releasing them now. It doesn't take as much as you think to send this price plummeting. It would take a few $1 billion. And if they're offloading it, it makes a difference if it's over the counter or if it's on exchange. If it's on an exchange, that type of money will really send this thing down. They have to go over the counter. Otherwise, it's going to hurt the price. But
I got a chart for you. I keep thinking of cool stuff to show you.
This would be like my doomsday. I joke about it on Twitter sometimes. I think it could hit 8K. I think this would really freak people out enough to where they're, like the OG Bitcoiners who got in real cheap. If they see it going to 8K, they might really capitulate for real. And that's what you like to see. That's when I get really incredibly bullish. I'm not saying we'll see this. Who knows? If we do, though, that would be a nice buy point. Like generational wealth right there. Somewhere around, and I know people are calling for 12K, they're calling for 15. I can see people going long on leverage around here. And what happens when everybody in the world's long on leverage? They wipe them out. So you can easily see, people going long here, and then the exchanges just flush them out, and you see a crazy wick. That's just something I have in my mind. Will we see it? I don't know. Time will tell.
How do you feel about this one?
Stop sharing my screen.
How do you feel about this being like a wave 1, wave 2, wave 3, wave 4, wave 5, and then an A, B, C correction? And this was the start of wave 1, wave 2, and now we're in wave 3 now. But that even with that, it's not going to be like these gains.
Yeah, that first wave is definitely done of the 1, 2, 3, 4, 5, ABC. I can see something like that. It makes logical sense to me.
Yeah. I don't know if this is how it's going to play out. But with an ETF coming, just how gold performed. I mean, gold did 420% over an 8-year period when the ETF got launched. And so, I mean, if Bitcoin's going to react in any kind of similar sort of way, the wave 3 will be the biggest wave, and it might be anywhere from like 120 to 140,000, but it might be extended out further, like into 2026 or something. and then this cycle ends in 2030. I'm not sure. That's speculation, but yeah, definitely something to think about. So yeah, it's those Elliott waves. They always confuse me because it's like, well, how do you know? Because it's waves within waves within waves, and
Yeah.
I get smoked out a little bit on them.
It's tough to find like what wave is the right wave. Like you just pulled up 5 waves that seem like those could be 5 waves as well. I guess it comes into how you want to look at it, what your perspective is.
I think the wave I think that's coming is DeFi out of necessity. Like people are going to need to adopt DeFi out of necessity to custody their own money away from centralized banks,
Yeah.
and that ease of transaction globally, no gates, no walls, send any amount, anytime, anywhere. I think that's a undervalued, and then being able to use DeFi to borrow from yourself, and you can do the lending, you can do swapping. There's all these protocols built out. I think it's just the natural evolution of where crypto will go. So that's what we're here for, and I'm excited to see how this all plays out. There's no shortage of opportunity right now.
I think Bitcoin also puts up a lot of walls. It's kind of become a centralized exchanges paradise, which I really don't like that. It started out as something great. It still is great in a lot of ways, but think about when you want to cash out. Unless you have somebody that's going to buy those from you in cash, peer to peer, you have to send it to an exchange. They have all your money. They have full control. They can freeze your funds, and you got to pay taxes on all of that, which there's nothing wrong with that, but it's just this doesn't seem as good as swapping on a decentralized exchange into a stable coin on Ethereum. That's just, to me, I prefer that. So I used to have a lot of Bitcoin. I don't have any anymore. I used to have a lot. So it's still nice. There's a lot of good things to say. It's got a huge network. It's still one of the safest things out there. And some noobs are still better off buying that than many other coins, the majority. So it's not my favorite anymore, but it's not terrible. Yeah, I'm not a big fan these days.
Yeah. Yeah, I mean, I used to mine it. I used to mine Ethereum and Bitcoin, and I was a maxi, and then I was moved on to greener pastures. So I've done way better with Hex and Pulse than I have with than I ever did mining Bitcoin and Ethereum. So
That
I'm just
says a
gonna
lot.
I'm just gonna hang out where I think the opportunity is, and I'll be out here, hopefully doing another stream with you sometime in the not too distant future. I really appreciate you for coming on, man. It's been a pleasure. Appreciate all your analysis and showing us your process. Make sure you guys go check out Zero on Twitter or on x.com/Zero Crypto. Any lasting remarks before we take off?
No, I think we covered most of it. I appreciate you having me on. It was a real pleasure. Hopefully, we can have another stream soon.
I'd love that, man. It's like chat was popping off this one, so we'll definitely have to have you back on. All right.
Let's do it.
All right, guys. We'll catch you on the next one. I'm on Friday with, or let's see, hold on. Oh, sorry. I think I'm on tomorrow with Max for a little session. So meet me over there on RH Max's channel tomorrow. All right, guys? Peace.